Hey, what is up guys, welcome back to ProTraderPath. I'm back with another video, and in today's video I'm going to talk about ICT entry models. Now there are a lot of entry models that ICT has introduced throughout his videos over 6 years. I am going to talk about the few major entry models that most of the ICT traders are using and I'm personally using for myself. Before I go to the main part, a few things that I want to talk about. As usual, in every video I say the same thing. Go to ICT's channel after watching my video, or even you can go first and then come back to my video, it's up to you. Watch this recent video that he uploaded or video before that, like watch his videos, but this one, the one he uploaded recently, that's the most important video that you can watch. Why I'm saying this is because a long ago I have uploaded my video where to start to learn ICT, right? Look what I talked about here: Scout Sniper, Market Maker Primer course, core content 4, 5, 6, 7, 8, 9, and top intraday top down analysis. These are the playlist from ICT videos that I'm suggesting in my video. Okay, go to ICT's channel, watch this latest video and listen carefully what he's saying, what sort of video he is referring to in terms of starting new or understanding his models that he is now trying to give you guys once again with more detailed explanation and thing. But listen carefully to these 58 minutes. Okay, like watch the entire 58 minutes. If possible, take notes from his video. Okay, so yeah, I mean that's all I wanted to talk about ICT and my stuff as well. And then today, as promised, I'm gonna talk about the ICT entry models. Now I have selected a few major entry models that I use for myself, and I will give you guys some idea how I use them. Okay, so the first entry model that I use is fair value. Okay, so what you want to see is price taking liquidity, giving you market structure shift, creating fair value on its way up, or when market structure shift is happening, creating fair value, we enter from the fair value, or there can be multiple fair values. I'm coming one by one. Okay, so fair value gap is one of his entry model that we all know. The second one that you will see me talking throughout all my videos on my channel, like whatever I have uploaded so far, everything you see in my channel, whatever the videos are, you will find I'm talking about the OTZ or OTE, optimal trade entry. Why I say OTZ every time is because this is the trading zone that we use to enter into a trade, and the entry that we take is called optimal trade entry because that's the optimal trading zone. That's where we look for the setup and market reacts from there, or we enter from there. The entry or the execution that we do is called the optimal trade entry. Okay, that's why ICT said it optimal trade entry. He will be talking about optimal trading zone as well, don't worry, and mostly about the 6-2 levels. Especially watch this video over and over again. I'm referring, please watch that video. If you don't want to watch mine, don't watch, but watch this video, take the notes. That's second way of entering into a trade. The third way is entering from a breaker block. Price took the liquidity, created a short-term swing low, took that liquidity, in between that two liquidities or swing lows it created a short-term swing high. When market gives you the market structure shift above that high with displacement, remember displacement is very important. What do I mean by displacement? I will try to explain later on if I can remember. If not, feel free to ask me. And I'm getting a lot of useful comments or questions in my video, that's why I started with this one, although I had planned something else to provide, but this is important. So yeah, I mean low, high, lower low, market structure shift happened, the highest up close candle with the highest body. Okay, so how do we define that? Let's say there are multiple candles like this at your market structure shift. The highest up close candle of the highest body is your bullish breaker block. Opposite is true for your bearish thing. So the lowest down close candle with your lowest down close candle with the lowest body, that's your bearish breaker block. In this term, what happens is when market breaks below that area, like so. Let me draw it properly so that you can understand. Let's say market created this, then took the buy side liquidity, came lower, break below that level with displacement. So this lowest down close candle with the wick as well, okay, this is your extreme breaker block, okay, because market is coming from a high to the low, and that's your extreme breaker block. In terms of breaker block, we use the breaker blocks week to week, but you want to look at the candle that has the highest down close body, okay, that's your bearish breaker block. So mostly what you'll see is price coming to that level and then going lower, and that's your bullish on, that's your bearish on, same thing, okay, just make it opposite, it will make sense. Now breaker block is another way of entering into a trade, or that's another entry model from ICT. Now order block is another way of entering into a trade, okay. Now order block, how you can define the order block? Same thing, market is coming or creating swing lows or liquidity levels. After the liquidity is taken, market gave you the market structure shift above that short-term swing high. So liquidity taken, market structure shift, the lowest down close candle with the body is your extreme order block. If there is multiple down close candles together, all of them together is your order block. However, still we want to look into the lowest down close candle or the extreme one, because if you look into the zone from that swing high to that swing low, that will be your discounted area, or even if you look from this area to this area, that will be your discounted area, okay. So when you are looking into a long trade, you want to enter from the discount. When you are looking into a short trade, you are looking into the premium, things like that, okay. So similarly, or the opposite is true for the bearish on. So this is your bullish order block. The bearish on will be simple, like the highest up close candle with the body, that's your bearish order block. However, if there is multiple, all of them together will be your order block. Why? Because in lower time frame, if there is multiple candles, on the higher time frame, that will be your one single candle that's creating that order block. So higher time frame point of interest down to a lower time frame point of interest. So that's number 4 of the ICT entry models. As I'm saying, there are a lot of other things that you can use or utilize, but I'm focusing on the major things, okay, or the main things that ICT also uses, or I saw throughout his trade executions that he used to execute his trades as well, okay. Mostly he uses fair value or the breaker block or order block until this far, but yeah, he uses a lot of other things as well. So another way is premium discount array. So same thing, liquidity grab, market structure shift from the swing low to the recent swing high. After the market structure shift, you look into the midpoint, which is equilibrium level. Below that is your discount. For a long entry, you want to look for your premium discount arrays around that area. It can be your order block or breaker block, fair value gap, order block, whatever it is, that's inside of your discounted array, and then market can go higher. So in this case, the premium discount and the OTZ, they are kind of, how can I say, like they are kind of relative to each other, or they are actually representing each other. However, sometimes what can happen is the OTZ has nothing here, like nothing means it may have the breaker block or maybe part of the order block, something like that, but price came to the discounted area. Instead of going to the exact OTZ level, it can retrace from there if there is a array over there sitting, if there is a array, right, like breaker block or a fair value gap just little above your OTZ. But I'm gonna come to that, I'm gonna make things more clear in a second. So that's, these two are literally working similarly, like the OTZ and the premium discount array, they works the same way. And mostly what happens is, if price comes to the 5 below that 0.5 of the equilibrium level or the midpoint of the leg, it usually comes to your 6-2 level, or sometimes even lower than the 6-2 level, around like 7 on 7-9, that level. However, The other way is the rejection block or the box setup. Okay, why I said or box setup is because box setup is bit different than the rejection block, but mostly it represents almost the similar thing. Okay, these are two different methods, but I'm using it in one single thing is because I really don't use that method. I saw it, I tried to learn it, I know how it forms, what happens during those moments, but I really don't use that to enter into a trade. So that's why I'm not focusing too much into this. I use all other things that you can see above, like these two. If you combine together, that's like one method. 2, 3, 4. These 4 methods are the most important, or you can say 5 methods, since as I said, like what can happen sometimes. These are the methods that I mostly use. Now you saw recently I have uploaded my silver bullet video, and few of the people are actually back testing and letting me know that it's actually working for them, or the results are very satisfying. The way they are back testing, or the way they implemented that strategy in their own strategy, they actually came back and comment or replied me. So now let me come to my entry model or something. When I enter, okay, when I enter into a trade or the setup that I have talked about, what do I look for in my silver bullet, especially the London one? Is the Asia session buy side or sell side been taken? In this case, let's talk about the sell side. Let's say the sell side is taken, there is a higher time frame point of interest, or my strategy says 15 minutes point of interest. What I look into is market giving me a liquidity grab market structure shift like this on the lower time frame, and then retracing to my what did I said about my retracement? My discount arrays or OTZ that aligns the best with my fair with the retracement. If there is aligning a fair value with my OTZ, that's where I'm entering. So what I'm doing actually here is I'm waiting for all those things happening on the lower time frame and the higher time frame. At the same time, I'm using fair value gap, OTZ, and premium and discount array. Okay, so 3 or sometimes even 4 methods together to enter into a trade. Why I'm saying 4 is sometimes I might have a balance price range or inversion fair value around this area that's aligning in my discounted area and with my OTZ, or I might have a breaker block that's aligning with my OTZ as well. Let's say I have a breaker block like this. Okay, so in this case, yes, of course it's not aligning because it's a drawing, but if the market structure shift looks something like this and that fair value or part of that fair value is aligning with my OTZ, this is what I do. Okay, so in my strategy I have at least 2-3 NT models combined together, and that happens most of the time. Okay, that's actually happening most of the time. And why I said watch the ICT videos, the first video, second video, both of them, if you can watch and take notes, you will find out what I'm saying here. In my other videos I talked about the common areas or multiple confluences to enter into a trade, things like that. I have talked over and over again in my trade execution videos or other videos as well. So in this case I have so many things aligning together at a level, and that's why that model, when it occurs, it has less losing trade than winning trade. Okay, and that's why yes, the strategy may look simple. Yes, it is simple, and simplicity is what you need in terms of your strategy. And I said previously as well, I said in my silver bullet entry model as well, and once you watch ICT's this video, you will understand why I'm saying this is because ICT mentioned so many times that if you don't have a strategy simple enough that you can write it on the back of your visiting card, you don't have a strategy. Okay, you will understand what I'm saying. Okay, just remember, after finishing my video or even before finishing my video, go and watch this one single video, this 58 minutes worth of video, and take as many notes as you can. What sort of video he is suggesting here to watch, what type of entry models he is suggesting here to watch, how he is actually telling you to put your stop loss or take your partials or even close your profit or position. Everything is in one single video here. Okay, the thing that I'm talking for more than like 3-4 months now, it's over there in that one single video. Okay, this is where I felt like I should make another video, and that's why I'm making this video today. And yeah, I mean, as I said, this is what I use or utilize in terms of my own model. So I have so many confluences. Number one is the OTZ or optimal trading zone that I use, that's itself is the entry model. Number two is a fair value, that itself is the entry model, and since it's coming to the OTZ, it's always coming to your discounted area for a long setup or a premium area for a short setup, no matter what. Okay, so that's why these sort of entry are high probability entries. And remember what you are looking into. Okay, there might be some other relative equal lows or old lows sitting right around that area, that's why I just extended that line to little left. However, you are looking for your multiple confluences adding up, so that market, why these sort of things are high probability or it works most. It's because number one is market has so many things to break below and take that sell side liquidity. Okay, so many things. Why? You have a bullish fair value gap that can act as a support and send market higher. You have a breaker block around this area that that in retail terms or in normal support resistance term, this area is actually your support and resistance. Okay, like the candle, whatever the zone is. So you need to break below that in terms of going lower. That's another thing. As I'm saying, it's just a drawing, so don't take it for granted. So your support resistance zone might be like this. Okay, whatever it is, just a drawing. So support resistance zone as a breaker block, you have sitting order block lower as well, you have a second fair value gap or a breakaway gap, or there might be only a single fair value gap. You have a fib OTZ or OTE that people has been using for ages, like even before my birth, I guess. Okay, since Fibonacci levels are introduced, my entry model looks something like this. Now let me put back all the things that I just mentioned so that you guys can take a screenshot of that. Okay, sorry, let me readjust the size of it so that you can take a screenshot and you can understand what are the entry models. So I'm just showing you for the buy side, the opposite will be true for the sell side, and I hope by now you guys have the idea how you can actually use those things. Okay, like if this is the buy side, I think you have the knowledge or idea about how you can figure out the sell side deliveries of these models. Try to master one at a time. If you can master the fair value and OTZ together, that's enough for you to form or build your strategy. Or you can simply look into a breaker block that has a fair value gap around the same area or same range, or a fair values percentage or partial is aligning with that area, like this one. So that's where you enter from the common area. Okay, don't get me wrong, I'm saying this a lot of times, I told about it before as well. So breaker block, you want to look into a fair value gap that is aligning. Sometimes it can align like this, the entire breaker block can be inside of a fair value gap, or sometimes the fair value can align like this. So whatever it is, you enter from the common area. In this case, you can enter from this sort of area as well. And if there is multiple fair value gaps, what I said is you look into, okay, let me draw that here so that you understand. So let's say there is a fair value here and there is a fair value here. This is where your OTZ will give you the more precision or come into place. However, you ignore the third fair value. Why? Is because if you draw your fib from the low to high, oh shit anyway, so if you draw your fib from the low to high, this is how it gonna look like. Okay, so the 627 and 79 level, you will see the first fair value. Even if you don't draw the OTC, if you simply draw the premium and discount, the third fair value mostly will sit above your discount area or sit inside the premium area, and the other two fair values will sit inside of your discount area. Okay, and if it aligns with your OTC, that's even better, like this way. Okay, so if it aligns with your OTC, that's even better. So you ignore this one, you look into these two, and mostly you want to enter from the top of your top of the fair value. But if you are good enough, or if you have practiced your OTC entry, you will see that the part of the fair value that aligns with your OTC, that is where price will come and then react, instead of reacting from the top. Even though if you see the first candle or second candle reacting from here, eventually it will come to your OTC and then go, because if it comes to the discount, this is the area it is willing to retest or come to. Okay, and also if your breaker block is aligning there, that's like 1 confluence, 2 confluence, 3 confluence, and your premium discount 4 confluences together. So this sort of entry will be your high probability entry. Okay, but of course you need to first have that liquidity of sell side or some major swing lows, something like that. Okay, mostly you want to mark your higher time frame liquidity levels. If that is taken, I will give you the liquidity levels or zones, like what sort of liquidity you want to look into. But for now, since I talked about the London silver bullet only, so focus on the Asia sessions liquidity mostly, and the relative equal highs or lows along with that Asia sessions liquidity. Okay, if there is a liquidity sitting right around that area. Okay, so let's say this is your Asia sessions low, and there is another liquidity sitting here. So wait until price takes that liquidity and look for your possible reversal points, like the PDRS, which is on the higher time frame. In my term 15 minutes, there will be fair value gaps, breaker block, order block, things like that on the higher time frame. Okay, so if price reaches to your higher time frame point of interest, and then on the lower time frame you get a setup like this one, that is where you enter, and that's what exactly I use for my strategy and for myself. Okay, so yeah, I mean that's it. And before I go, let me actually give you a small thing that I didn't talk about in my previous video, or in my strategy video, silver bullet strategy video, which is exactly the thing that happened today. Okay, so I had the chart hidden, but since I saw everything, I'm gonna give you a simple strategy or simple example that you can utilize. Okay, now at around this area or today's price, okay, what happened today during the silver bullet? I didn't trade. As I said, I'm not gonna trade until it's January 3rd, or even the first week after, like the first week is gone at January. I'm not gonna enter into a trade. So this is your Asia session sell side liquidity. Along with that, you have this swing low and this swing low. Okay, and let me actually put the replay tools before the London session starts. Why I'm showing this is very important. I hope you guys will find this information valuable, but I'm not suggesting you to do that. This is your Asia sessions buy side liquidity. Okay, like the kill zone, Asia kill zone buy side liquidity, and above that, do I have anything that can send price lower? I had a fair value here, but as you can see, like market traded through it once, came lower with the very next candle. So this fair value market didn't respect, although it's showing rejection from this area, but I'm not gonna use this fair value as my point of interest. Why? It got violated here. Okay, so I'm not sure if this is the area market gonna come lower or not. However, with this liquidity, if price wants to go, price can take this liquidity and this sort of liquidity. So around this leg I have nothing, but on the left, from where market is coming lower, and you see like liquidity grab, market structure shift, fair value retap, coming lower, break below that swing low, again there is this fair value. So I have this fair value that market previously respecting. With the wick, I don't care if the wick goes higher or not, but with the body, if it goes above, that's where I don't count that fair value, because that fair value is getting violated on the same time frame what happened here. So I have these two at the extreme level. Or if you look into this, okay, the premium to discount, you see the OTZ level, that's where market went. Or even like before this swing low, the OTZ, that's where market went. Then this swing low, the OTZ, that's where market went, and that's the lowest market reached, so that's the OTZ level, but you don't really need that. As you can see, the from high to the low, that's the leg, and that's where I have two fair value gaps aligning, some part of it and most of it here. However, that's my 15 minutes point of interest, and since there is nothing that I can see on the 5 minutes, on the 15 minutes, I will go and look into some 5 minutes fair value gaps as well. Okay, inside of that 15 minute, I have this 5 minute fair value as well. Okay, why I'm saying or showing this is because to reverse, market can do a few things. Okay, the order blocks it has created on the higher time frame, like the 15 minutes time frame. What are the order blocks I can see? I don't want to make this video too long, so I will just shortly say, like, this is the order block that I can see, or this is the order block that I can see. Okay, there are other confluences regarding that. So market took the liquidity, traded lower. Okay, so this order block or this swing high, it traded into that order block, so that's why this order block is confirmed. And when this swing high traded into that order block, this order block is confirmed. So now to make anything else other than this as my order block, I need a close below this candle. Okay, so this entire candle is my order block, right? Like the set of candles. So this is my order block. I need a close below that happened here. Okay, nothing in between is my order block. I'm considering these two. So the extreme one is still this order block, and the high that it created, I use this because that's where the rejection block is. Anyway, forget about the rejection block. I don't have too much insight about the rejection block as I don't use it. But about the order block, every time I made a video regarding order block, I said if the swing high is not with your order block, add that, and that is what actually the rejection block is. Like from the body to the highest it went, that area of the zone is your rejection block. So you will see market trading inside of that zone and coming lower, and that's exactly what's happening here. Like from this to that, you see like price tapped to the rejection block and then came lower, again tapped, came lower. Anyway, so that's a short thing that I'm gonna tell you. But remember, I have an order block around this same 5 minutes fair value gap area, or wherever I draw it, whether that's the 15 minutes order block, but on 5 minutes I have a fair value gap around that area that market respected previously and came lower. Okay, so Asia sessions buy side is taken. Let me go to the 1 minute and just put a the silver bullet time so that I don't go too fast. Why I'm saying this is because there are sometimes more opportunities to take your entries or trades. Okay, at this time I have nothing in my chart, but the Asia's buy side has been taken. I'm gonna remove this one. I have a relative equal or nearest liquidity level there, and another more liquidity is here. But where can price mostly retrace from? The only thing I'm seeing is that higher time frame fair value gap, order block, and the 5 minutes that's aligning all together. That is the area price can mostly reject from. Remember what I said before when I was showing the entry models, and that area is also aligning with the higher time frame OTZ. Remember the 62779 level, that's the area that's aligning. So price can reject from that area. Before that, all I'm seeing is all the possible liquidity levels then that price can go. So let me put it in a faster approach, and I will stop right when the silver bullet starts. Okay, so now silver bullet is starting. It took the buy side liquidity. I'm gonna look for a reversal from where? From here I can look for, but let's see if I got any or not. Okay, so this is liquidity grab, market structure shift, everything happening before my silver bullet. What I'm looking here is oh shit, I went too far. Anyway, so price took a liquidity, gave you a market structure shift with displacement, and you have two fair value gaps over here. Okay, one here. Unfortunately I went too far, but what I'm saying here is you are not expecting market to retrace from here. Why? Because it created equal highs. There is another high right above that high. Okay, remember that 15 minutes high that I marked, it's right above there. So you have too much buy side liquidity left. If you get a market structure shift around this area, do you enter into a trade? I don't think so, because it didn't reach to your higher time frame point of interest. Waiting is very important, but if you see this sort of liquidities left and that's the area possibly price can go, you can utilize these things during your silver bullet. When the silver bullet started, you got this liquidity market structure inside of your silver bullet, and you have two fair value gaps. Now why I use the OTZ, this is the reason I use my OTZ. Okay, for the first retracement, this was my OTZ, and that's where price came. Unfortunately, I went too far, that's why I cannot show you, or I cannot tell you that this is a possible entry, but that was the entry that I was actually about to show you. And the fair value gap candles low. Okay, why I'm not taking the upper fair value in this case? See, this is why I said, like, where I have, I'll give you so many things, just give me a second. Okay, that upper fair value is sitting completely above your discount or premium area. I hope you are able to see this, but that's your equilibrium level, that 110 level, or this level, the fair value, this one is sitting right above that. So that fair value, even if market comes here, I'm not interested. Why I'm interested with this specific area? Look at the breaker block. What did I tell you? From low, high, lower, low. Okay, this is another high that is equal, but it has enough candles in between to consider as a swing high. Okay, so that's your market structure shift that I'm talking about, and that's your liquidity graph. It's only because it's silver bullet time. Okay, also it's coming from your breakaway gap at this level as well, if I'm not wrong, but I don't really want to look into that for this moment being. Just try to understand what I'm saying here. Your OTZ discounted area, fair value gap, from the low, high, lower, low, or this side, like it's the equal high, however you want to take it, you can take it. Okay, so what did I tell you or told you about your breaker block? Remember the highest up close candle with the body. This is the only candle, or the highest up close body candle. Okay, so this is your breaker block. I'm not saying this two is your breaker block. Okay, and that's the highest, and this candle happened before this high was created. So if you take this as your high and consider the market structure shift, still this is your highest up close candle. Why I'm showing this is because, look, let me take up the positioning tool. Look where this candle's wick came. In my OTZ, as you saw, in the fair value that's aligning with my discounted area, and the common area that I'm talking over and over again. So how many confluences are there to take this long? Number one, you have a 1 2 3 move, or liquidity graph market structure shift, or high low lower, like sorry, low high lower low, and then market structure shift with two fair value gaps and displacement. This is what displacement looks like. With just two candles, it created 1 2 fair value, like two candles. So I am saying two, like two green candles, it created this fair value, and there is another fair value with the next candle. So within this small move, there are two fair value gaps, and the size of the candles are surpassing anything you can see on your chart, even on the left, whatever market is trending higher. Still, if trend is not your friend, you can see like any black candle is not a single black candle is the same size here. Okay, nothing. As you can see on the left, wherever you go until this far, nothing is aligning or at the same size of that. So anyway, what I'm saying here is, you have your discounted area, you have your fair value, you have your breaker block, this one, okay, this green candle, and you have your OTZ. Remember the OTZ? Let me go back to the OTZ one more time. So that's your OTZ. Now, since I'm seeing this already, or I saw this already, and I didn't personally trade it, but I have videos recorded that I'm taking entries on both direction on the same day and during the same silver bullet, and this is what I'm telling you guys to learn. Now you can do one of two things. Number one is, you can put your stop loss here at 1. That's the safest stop loss. Okay, that's the safest stop loss possible. You can do this, or you can put your stop loss at the fair value gap candles low, since there are two fair values, breaker block and order block, and if I'm not wrong, this will align, or this will actually cover your mean threshold of the order block as well. Okay, so yeah, so that low is covering your order blocks mean threshold. So also this is another thing. Someone asked me in the comment, where do you put your stop loss? How do you know? If you are too confused, if you are using your OTZ to enter, let's say this is your OTZ, you put at 1. Okay, if this candle had a huge wick, like I will give you an example from the live chart as well. If let's say this candle had a wick like this, okay, wick like this, what you do? Do you put your stop loss here because your OTZ is aligning there? No. If you find a clean setup and the candle has a huge wick like this, maybe not this long, I mean I'm drawing it of course, but whatever, the wick like this, you simply try to at least cover this far, or why I'm saying this far, okay, like the wicks high to the wicks low. Okay, that's the consequent encouragement. If you have looked into this sort of area in a higher time frame, let's say I'm looking into 1 minute, but if you look that sort of area in 5 minutes or even 1 minute, if your chart allows you or your plan allows you to go to the seconds, that I cannot go. That's why I don't even use it, because I don't need that membership. Since I'm using broker, I don't even need any sort of membership to trade using TradingView, but just for the purpose of making videos, I use the very first basic plan or something, and I bought it for a year, so I don't want to change it anymore. But if you can go to the second charts like 30 or 15 seconds, no matter what, in every time frame you will find a order block over there. People talks about a fair value gap around this area. I'm not gonna say that. 100% of the time you will get a order block, but 100% of the time you will not get a fair value gap around that area. That's why I say, like, I don't want to talk about fair value gaps around that area. Sometimes there will be fair value gaps, but 100% of the time there will be a order block. Okay, write it down and look into higher time frame weeks like that, come back to lower time frame, look into that area if there is a fair value or a order block 100% of the time. Anyway, so there will be this is called the consequent encouragement or the CE. Okay, so that area is where you can put your stop loss just to be conservative and safe as well. But if your OTZ is actually giving you, like, sorry, if your order blocks mean threshold, see, like that stop loss is covering your order blocks mean threshold, at the same time the CE. So this is a lot of confluences that price needs to break to hit your stop loss. Okay, that's why I'm saying like this. But if there is no wick like that, simply use the low of your order block or the fair value gap, like 1 2 3 third candle, that's the fair value you are entering from. Use the third candle's low. If there was more swing lows and another, let's say I entered from this fair value, okay, that fair value, where would I put my stop loss? I must have to cover this fair value, because if market wants to trade to this fair value, I will be stopped out if I don't do that. So in this case, you can either use the candle that has the fair value or same thing, the third candle. So this is how you select your fair value stop loss. Okay, either if there is a order block mean threshold that's covering, you can go like this, or simply the low, or depending on how many fair values and from where you are entering, you look like, if there are multiple fair values, I would still use 1 and 2, these two fair values to enter. I told you the reason. And since this fair value is in my extreme area, I have to cover that fair value. Now sometimes I can put it just below the fair value gap, but to be safe, this low, like this stop loss is not covering my mean threshold. I'll show you one last time. Okay, see the mean threshold, that fair value or this stop loss is not covering that. So if market wants, it can create a huge wick like that and come to the mean threshold and stop me out just because I was too conservative with my stop loss. In this case, that candle's low or the opening price is covering that mean threshold. This is a better option to go for. Okay, that's why, like, you have to observe it by yourself. Now anyway, the entry would look something like this. Okay, from the common area and the fair value that's aligning with my OTZ, or in short, the 6 to 7179 level, wherever the fair value gap candle is aligning, I enter from here. In this term, you see, like, the opening or the high of the order block, let me just make it breaker block so that the color changes. Okay, so the opening or the high of the order block is not aligning with my 6 on level, so I want to enter from my 6 on level, 6-2 level, because if market comes to the high, it will tap into the 6-2. You will find it. It's not something I'm making up. This is something that I have been observing over the last few years, I can say. And now I had it too fast, so it went higher. Now as you can see, I already have a huge take profit, but do I want to target that? I don't really think so. What I said about my silver bullet is 1 to 2, but since these liquidities are actually sitting, like, you see, like 2.2, and right above that I have this liquidity, that's the highest I could have targeted during this. Although I know I have means although I'm anticipating market to go until this far and then give me the sell side setup that I'm expecting, because that's the only area market can retrace or reverse from, unless it's making something up over here. Okay, what do I mean by that is, let's say this is a order block because it took all the liquidity and also traded into the previous order block, like this candle. So unless it respect and reject from there and give me the proper liquidity grab market structure shift move, I'm not going to sell short until it reaches here. But let me give you another thing. You didn't take this entry, and my silver bullet, I said I need a liquidity grab market structure shift with fair value, and then I can look into a possible sell short. Now this thing happened before my order block. Okay, why I'm not counting? I said already, like, your liquidity market structure can happen before, but what is happening here? Can you look into that. Your liquidity grab happened there, your market structure, you can say this internal or this external, okay, like this. Now you have one fair value, two fair value, okay, it's happening before. Are you getting your entry inside of that? Why I'm saying that is because you see, let me draw the OTZ and let me explain this part for a bit. You see the OTZ, it's not aligning with any of your fair value or anything, and market didn't go there. However, this part of the fair value, few of the part, if I'm not wrong, will be aligning with your what, the premium and discount. So that's your premium. You want to enter from here before the what it calls, before the silver bullet. I didn't suggest anything like that. However, third candle, that's your stop loss, and this is your liquidity. You still got your 1 to 2. Why I say 1 to 2? This is the reason I say 1 to 2. Okay, if you find your things, you got your 1 to 2 before your silver bullet, and then your silver bullet started. Now it didn't go to take the sell side liquidity of the Asia. Did I said to target that low, or did I said 1 to 2, whatever is closer to each other? This liquidity is close with my 1 to 2, like this. I don't know why it's not allowing me to put it here, but anyway, this liquidity, it's giving me 1 to 2. Anyway, this is not an entry. That's not what I'm here to talk about. However, come on, the 10x. Look what happened around this area. Market went to your OTZ, your high time frame point of interest, took the swing highs liquidity that I anticipated, like this entry. If I had multiple lots over here, that's what I usually do. Like if I have multiple lots, I took partial at 1 to 2 or even these relative equal highs. I close some partial, put my stop loss to break even, and see, like this candle is the candle that took all the relative equal highs liquidity. And after my even, let's say I didn't what it calls, let's say this is where I got my 1 to 2. Okay, after 1 to 2, what I do, I put my stop loss at break even. Remember, did it come to my break even to stop me out? No. And then leave the rest for runner where you are anticipating price may go. There are a lot of other ways to take your profit, like using the standard deviation, STD, like this. Okay, and look where it respected or reacted mostly. 1.5 level, that's where you are getting most of your rejections or respects. Then 3, then look, the -4 or -4, exact tap over there, now coming lower. In between there are some other things that I wanted to show you guys, which is the quarter theory that ICT talked about. Okay, so what is the quarter theory? From the 1 standard deviation to the 2 standard deviation, I have the 0.5 level over there, like 1.5. so that's the midpoint of 1 standard deviation. Okay, the quarter theory is midpoint of that half and that half, like quarter, right? Every 25% or 2.25 deviation is your quarter theory. So somehow I made it, but I don't know why it actually didn't save it. So let me give you the 1.25 level, -1.75 level, that's quarter theory, right? Minus 2.25 minus 2.75. You don't look into things like this much, but I'm just giving you because it's important. 3.25 and minus 3.75 until 4. You have all the quarters that you have marked from 1 to 4. Okay, look where it's stopping, 1.75. look at the reaction. Okay, this is important, even now where it's rejecting from. On -2, you have rejection here. Next time market rejected from that and went higher, like came lower until that far, went higher. 2.25 still have some respect with that candle, but I'm not gonna count that. There is nothing much. But this high, when market came below that 2.25, look where it respected. But this is something that you need to observe. 2.5 respect, it went higher without respecting, but it respected on its way back. 0.27 respect here, respect here, respect here, respect here. You are getting that, right? 3 respect, same thing here. Finally broke below, went above with some volume imbalance and other stuff. Still you are seeing some rejection from that level. 3.25. look and look how many times market came and respected that area, both ways, both sides. 3.5 you can see all over the place. Now finally 3.75, you can see that level as well, like that. I don't know that orange line is something you can see or not. Let me change the color. Now you can see that red line. Look at the respects of the body, the wick, however you want to take it. Now finally the 4 has reached and market is coming lower. Okay, so this is very important, the quota theory. However, what I was about to say is during the silver bullet, see, it's still inside of your silver bullet. I went too far, I'm sorry about that. You have your liquidity graph from these areas. That's your internal market structure shift, or the high to low to the high. Why this is a high? I have at least 2 or more candles on the right and on the left as well as the lower highs. So that's a swing high or fractal high. That's another high that it created, took the liquidity inside of your high time frame point of interest, where you have a 15 minutes fair value gap, 5 minutes fair value gap, and a 15 minutes order block. Remember that area, market coming lower. Now you didn't take your entry from this. You see there is a small little fair value, and since there is a volume imbalance, I can add that with the fair value. However, if you don't want to add, keep an eye on the volume imbalance, because that's fair value gap as well. There is your second fair value. Okay, the first fair value is a very small one, like this. I don't care how small it is. Eventually what happened, like if you found your entry somewhere around that area, look where it's coming. See the sell side liquidity, wait and watch. I cannot go any faster than that. Let me go like this. Okay, now I can. On the 15 minutes, look eventually where it came from. Where I marked, price never retested that area. It came lower and took the sell side, all the sell side that I marked, and it is still crashing lower. However, your silver bullet, if you didn't find your entry inside, what I said is you don't force your entry, you don't look for entries after the silver bullet happened. I hope I have provided good enough information. Until next time, take a very good care and bye bye.